Welcome, everyone. Thank you for tuning in today. I'm Vignesh, and I'm the influencer marketing expert at Fyers. Our goal at Fyers is to provide clients with the best-in-class platform that is robust, dependable, and enable them to trade efficiently. Today's webinar is brought to you by Fyers in association with Quantsapp on intraday option buying. Quantsapp is a dedicated options analytics trading platform made for traders by traders with the widest range of free option trading tools in the industry. Without further ado, let me introduce today's speaker, that is Mr. Rahul Prajapati, who is a corporate trainer at Quantsapp. Rahul has over 10 years of experience in trading, and his expertise is options trading. Having trained more than 10,000 students in financial markets, he has aced the Elliott wave concepts along with derivative trading with financial market experience. Over to you, Rahul.
Oh, thank you, Vignesh. Thank you so much. Yeah. Okay. So first of all, thank you all of you for joining this webinar. I can see that the participants are almost 500. So we almost reaching a good number. Okay. So it will be good to share a lot of learning content today. Okay. So the time that we have is approximately 1.5 hours. Okay. So majorly the topic is basically you can see that we are talking about the intraday trading. Okay, so I'll try to give you a whole setup. How can we reach to a point where we can simply go and just take intraday trades on the options, right? Okay, so the whole agenda is to get to that point where we are just targeting the intraday trades specifically. Okay, and by reading the data points. So before I start, okay, so let me just ask a few questions so that I can get the how the good crowd is right now with options market, okay, and how for how long these you guys are trading, okay. So just if I ask one question before, like how many of you have just started the trading after COVID specifically, right? So I'll ask my team to put a poll on this, right? Okay. So you can just click on that, and you can answer the second question also if you get that. Okay. So there are two questions. One is how many of you started after the COVID? Okay. And positional trader and intraday traders. Yeah, I'm getting good numbers, right? Okay. So yes, just 5-10 seconds more and we'll get the answers. Please, I just want everyone to answer this so that we'll get a good number so that I can, proceed with that, agenda, right? Okay. Okay, so almost 50% have been voted almost, right? Good numbers, yes. Okay, so almost, yes, okay, 70%. So I just, request everyone to vote so that we get the good numbers approximately. Okay, we get 70%. So those who haven't voted, just click one or one of the example, options that we have in these two questions, so that I'll get the idea, right? So how to proceed, right? Okay. Okay, so even if we got like 70% of the data, right? Okay, so in this we can simply say that there are almost like 65% of the people they started with the after the COVID, right? That's a good number. Okay, and post COVID, again that's so pre-COVID is that 36%, right? I'm getting that. And second thing is positional trader and intraday trader, right? Okay, so positional trader we got 80% and mostly intraday traders, right? So everyone wants quick money, right? I can see that. Okay, so yes, so that's why we just decided to go with this particular topic today. So we'll be discussing about the how to do intraday trades, right? Okay, so almost 82%. So almost out of 500 people, 82% people are trading the intraday. Okay, so see the numbers. Okay, so that's a good number. Okay, so let's start and building the concept. Okay, so I'll just share my presentation. Okay, and we'll talk about how to proceed with this. Okay, so we'll be talking about intraday option buying specifically. Okay, and if we get some time, I'll share something different also, right? Okay, so what is the content and what we are trying to do today? So the first agenda is we are trying to talk about how to select the stocks to trade for intraday. Okay, the first thing is always we need to go and select the stocks, okay, or probably index if you want to trade, right? Okay. And then we'll try to analyze what is the ultimate trend of a market. Okay, it's bullish or bearish, or in which direction we need to trade. And then finally we'll talk about how to find a strategy and how to manage that trade. Okay. So this is the agenda for intraday, and even if I get a time, we'll definitely talk for positional also, right? Because we have a good 20% number of the people who are trading the positional trades also, right? Okay. So we'll talk about that also, right? Okay. Now, so talking about the derivative specifically, so I'll just ask the simple question again. So how many of you use open interest? So I'm assuming that you all know something about open interest, right? So okay. So how many of you use the open interest as a trading tool specifically? The reason being, I wanted to know this answer because I know this answer, right? Okay, because I'm in this industry from last 10 years, and anyhow, if you see, the open interest is the only data that we get, right? So even if I ask you, even if I don't ask you this question, I know this answer will be somewhere around 80 to 90%, right? And that's what a concept comes in this picture is we call it a herd trading. Okay, so we tend to copy others, right? Okay, so have you seen that number? Okay, so that people say that 90% of the people lose money in the stock market, right? And we always, there's a contra statement with this, that if you go and go, if you meet 10 people, okay, so they will always ask you what's your view in the market. Okay, they are who are trading in the market, they always ask you, and they always believe that other person knows better than them. So if when we are doing this kind of things, we are asking the other people and we are just following those people, right? Okay, so we are just again doing the herd trading. We're just copying it. Okay, and that's why people started using open interest as a trading tool, and then again we go and sell. If so, there are a lot of option sellers in this market, right? So they just go and sell highest call and highest put option, right? And they just, probably some are more smarter and they will go and sell even higher strike prices. Okay, so that doesn't define the way to trade in the market. Okay, so generally what we are going to talk about is we are going to create a trading setup today. Okay, how to create a trading setup out of this whole derivative data that we have, because as a trader we only get one data specifically from the open interest, and that is in the derivative market, that is only open interest, right? Okay, so we are not going to copy it. We'll just to create some good system, and we'll use it to make money out of it, right? The agenda is that we should earn money out of this derivative market, right? Okay, so stay tuned till end. There are a lot of things to cover, and I'm creating a base for it so that you in end will get a complete setup. Okay, so we'll discuss a lot of things. Okay, now next thing. Probably there are a lot of people probably from Delhi or probably some Mumbai, right? Okay, so can you see this place? Can you identify this place? So even if you are like in Delhi or any city, right? Big city, right? Okay, we have some one station in every city which looks like this, right? Okay, if you talk about Delhi Metro, we have something called Rajiv Chowk. Earlier it used to be like this. In Mumbai, if you go and we can check the local stations, so we have this Borivali and Andheri probably, right? Okay, so you get this much of crowd, right? Now, why I'm just showing you this picture, there is a reason behind it, because what happens is this: if you stand somewhere in between, okay, what will happen? The crowd will push you in and they will push you out also if they want to, right? So that's what happened in herd trading when we copy it, right? Okay, fine. Okay, so the reason being I'm sharing this is that market also shows this kind of behavior. So we don't just go and just copy others, right? Okay, we'll just create something out of it. Okay, so see, so what we are going to talk about is that if you see this here, like I'm just sharing one example, I'll talk about in detail. So what happens is this: if you see this green bar of 36,000, this is the earlier example. I just wanted to share this screenshot. Okay, so what happened when market was trading somewhere here? Okay, so market moved up and these all call option sellers got trapped in this. Okay, so if I just go back to the picture that I showed you, imagine a situation where what happens is this: in this situation, some emergency situation comes up in this crowd, right? What will happen? There will be huge bloodshed happening in this, right? And there will be a lot of people might be die in this case, right? Okay, so this kind of situation also arises in the markets. Understand this thing. This is the same situation happened. There are a lot of crowd on 36,000. There are a lot of people who are selling this option, right? And what happens if market breaks this level from here? And as you can see, that market has actually moved up by 400 points in this case here, right? So what happened? These all option sellers got trapped in this. See, they have all unwinded the position. When you find this bar as a hollow, that means a call unwinding. So they all are exited from the market, and they might be shifted to these call options, right? So they all got trapped in this, right? So this is where we want to create a setup. There is a, so when you're going to make money as an option buyer, when you're going to make money, you will always make money when the option seller will lose. That is the sweet spot of the market, right? Okay. When you're going to make money, so when option seller make money, option seller always make money when option buyer loses, right? Okay. Because they take care of, all those the theta and all those things, right? Okay. We are not going to talk about those things, but still we know this thing because time kills us as an option buyer, right? Okay. So we need to find that exact time when to enter the market. Okay. So an option buyer will only win when option seller will get trapped in the market. Okay. So when he is not making money, we are the option buyer. We are going to make money in the market, right? Okay. So that is what situation arises in this case, right? Okay. I hope this is clear. That till this point, we are all okay. Now, so that is what a situation we need to focus and we need to find these kind of things. But to reach this area, probably we all are new to this thing. Okay. So we'll discuss the whole concept first and then we'll, come to that thing. Okay. Now, see. So as an option trader, okay, we get these three data, okay, price, volume, and open interest. Now, what I've seen over the period of time, even if I want to trade intraday, what happens? Generally, what people do, they just so at 9:20, 9:30, they will just open a screen. They will see the chart. Okay, this looks bullish. This looks bearish. They will put some indicators and okay, that looks bullish and let's go and buy it, right? Have we decided what is the trend of a particular stock? Have we decided what is the trend of the market? No, we haven't. And even if you open any particular basic technical analysis book, they always say the first 6 premises that we have for Dow theory, it says there's always trade in a trend of a market, but we always try to be going counter trend, right? So that's what we are doing. Okay. So using all these data, we'll try to, come to one good conclusion. Okay. And that's what we do. So what people generally do, they will open a chart, they will put some moving averages, they will put some indicators, and what actually happens, they will start trading the market and eventually they will lose. So that's what happening. And that's what the trend I've seen over the period of time. Okay. So I want to make your mind ready first that where is the market trend actually? And believe me, I'll make you ready for that you won't see you don't have to see the chart specifically till the time we are not taking a trade. Okay. For analysis, we're not going to see the chart, any chart. Okay. Fine. So let's try to build the concept on this. Okay. First of all, so if I move to this part, okay, so if I just simply go and try to learn something out of it, is that okay? So I'll just come back. Okay. Oh, so before I just put this, so how you all basically decided a trend of a market? So I'll ask my team to again put a poll, small poll. Okay, fine. Okay. So okay. So they will put the poll and just answer it. Okay. So you will have 3 options, right? Okay. So you'll get this. So let's say if Nifty is in uptrend or downtrend, okay, how will you decide? Okay, what are the things you see? So you have 3 options: news, technical analysis, derivative analysis, or anything else, or none of this above, right? So there are, if the none of the above is the answer, that means you are just trading on a hunch, right? Okay, you are just focusing on that. Okay, again, a good number. I'm surprised to see. Very nice, very nice. Okay, I got good numbers again. And I can see that number, why it is. So I'll share. Just give me a second. Let everyone do it. Okay, just 5 more seconds. So I got almost 80% answers. Okay, so again, a very good number. News, if I check the news, so there are 3% people who are still, focusing on news and how market is behaving. Then we have 81% for technical analysis. So I can see where the huge crowd is there, right? Okay. So as you can Google it and you can see that the highest population for technical analysis is in India, right? Okay. So we have the highest number of technical analysis. I can see that number here also. Okay. The good poll, right? Okay. So 500 is a good number, I think. Okay. Now, the third one is derivative analysis. So I got only 11%. 11% people are only looking at the derivative data to analyze the market trend. Okay. And there are still 5% of the people who just don't believe in any of these things, right? Okay. So they are still just trading on a hunch, right? So good number. Okay. I think, okay. So 81% people use technical analysis. So probably they are just using the price action or probably some indicators, right? Okay. Now, what happens is that's probably what could be the, things that you decide a trend. So probably a moving average or the indicators which define a trend for intraday or probably, positional way. Okay. So let's talk about in a different way to create a trend. Okay. Fine. How can we decide with using the actual data what traders are doing and then decide a trend? Okay. So for that, we need to study open interest in detail. Okay. Fine. Okay. So what is that thing? So first of all, let me just share a few basic understanding of this. So there is a 4 type of relationship between, the price and OI. Okay. If I say Nifty's open interest today is 50 lakh, let's say, or 50 crore or 500 crores, right? Okay. That number doesn't define anything. That number does not have anything actually, right? Okay. So even if that is increasing, that is decreasing, does not create anything. Okay. You don't get any some sort of any sort of idea out of it. Now what we need to do is we need to compare this thing with the price. Okay. So what happens? Let's say the price goes up and OI also goes up. So we say both are increasing. That means if the price is going up and there are a lot of people who are ready to buy at a higher price. So price was at 100, price moved to 102, 103, 105, 110, and the people are still buying it. That means Y is increasing. So what happens? We say there are more trades on the long side. Okay. That means long build up. We call it a long build up. So in derivative language, we call it a long build up. Okay. So what is a bias? It's a bullish bias. So when both are increasing, we say it's a bullish market. Okay. I'll show you how to use this. Just let me finish this particular slide and then we'll move to. Second is both can decrease also. Okay, the price can go down and OI can also go down. So that means the stock was trading at 100 rupees. It went up to 120. Now what happened? So OI was increasing at that point of time. Now price came down. OI is also going down like this. So that means what is happening here? It's unwinding. The people who bought it earlier at 100 rupees or till this point, they started booking the profit. Okay, it is a kind of not a it's a temporary move that we have. Okay, so whenever this is happening, it is a temporary move. Market likely to follow the previous trend. So it was bullish. So again, it has to go up. If market goes up, again we'll come with this situation and OI will increase. Okay, so that is long built up again. Okay, market will come down again. This is long unwinding. Again, will market move up? It is long. So if you know this, so probably when Vignesh was introducing me, so he told me that Rahul has, had a good hand on, the Elliott waves, right? Okay, so generally I had a good experience. So I'm trading Elliott from last 10 years, right? Okay, so now I wanted to relate this thing to that thing, because when the Dow Theory Elliott wave came into the market, we don't have the open interest data. Okay, so we were not trading on, so that theories are actually silent on open interest. So they included the volume in that. If volume is increasing, that is happening, price is going up. So we just try to improvise on that thing. Okay, so till the time when market is moving like this, making higher highs, higher lows, okay, that is the uptrend we know in a technical analysis, right? Okay, if we include something in this, that is open interest data, it will again give me some good picture about it, what actually traders are doing, right? So in this case, it will be mostly long and it will be mostly long unwinding. It is long, it is long unwinding, it is long. So that means there is a cycle happening in this. Why? Cycle is something which is getting repeated again and again. So when market goes up, it is long. When market shows profit booking, it is unwinding. Again long, again unwinding, again long, again unwinding. So this is a concept we included in this, right? So even if you're trading Elliott wave, so I've seen 70-80% of the people are, using the technical analysis. So they are aware of technical analysis, right? And they must be aware of Elliott wave concept, right? So even that, and even a higher highs, higher low concept, okay. So that is what is happening. So when market is moving up, mostly it will show long and long unwinding. So we call it a L and LU cycle, long and long unwinding cycle. Okay. That is a one way to identify a trend of a market, that the stock is in bullish mode. Okay. On contra, what happens if market moves down? So OI increases. So that's the third case. Okay. When market is coming down and OI is increasing in this case. So that is more people are creating trades on the short side specifically. So they have a bearish bias. So they are selling the market now. Okay. Now they have sold it at 100 rupees. Now the stock is at 80 rupees. Now it will show some short covering. It will move up, but OI will start declining. So that is the short covering. Okay. Again, market will fall. Again, will it move up? Again, market will fall. So when market moves in a downtrend, it follows a short and short covering cycle. Okay. If I just wanted to create it in a picture, so I can show you here. See, this moves. So it is long. It's long unwinding. It's again long. It's long unwinding. It's long. Okay. It's long. Okay. So now when market started falling from here, so will be short, yellow colored short covering, short covering. Okay. So this is how it works. So now this is the concept. Okay. This is the concept of OI cycle, right? We say this is a OI cycle. It says that whenever a stock is in uptrend, okay, whenever a stock is in uptrend, it will more of the time, it will follow a long unwinding cycle. And when it is in downtrend, it shows a short and short covering cycle. Now the question arises is, we are trading an intraday. Why we are trying to, using this a positional view? I'm talking about a positional view as of now. As I told you that we need to trade in the direction of a trend. So first of all, we need to see the overall picture. Even you all are technical analysts, right? Okay, so I can see that. So you always go and check the weekly chart first. Okay, you see the overall picture, and then you see, okay, the biggest trend is bullish or bearish, right? So let's go and check what is happening in a 1 hour chart or probably daily chart, and then you go and take a trade in the hourly chart probably, right? So the overall picture and probably a multi-time analysis that you guys do is same what we are doing here. We're trying to get the whole picture that which stock is bullish right now, or which stock is in a trend. So we'll only going to trade those stocks which are, in a particular trend. We are not going to touch any particular stock which is non-trending, because that is what goes against us as an option buyer. Okay, that is a problem we have. Okay, so we are not going to touch any stock which is non-trending. So if that data is very random for every day, let's say it is 1 day's long short covering, then unwinding, so then 2 days long, 3 days short covering. When data is something like this, it says that the stock is in non-trending. It is not showing any particular cycle, right? So that we can simply see. Okay, fine. So this is what a trend says. Okay, now so long and short covering. Okay, so long unwinding and short covering are basically a temporary phase which is going to go out of the market soon. So we don't have to be worried about it. Okay? So you can see, this is the chart. I'll show you in the application also, right? Okay, you can simply see just a small example here. So if you see what happens in the Ashok Leyland since 8th May, it went up, and you see, so what happened is, actually we have done a color coding for this. So if you can simply see what is happening with long unwinding, short and short covering. So we have done a color coding for all those 4 conditions. Whenever the situation arises, it will automatically give me that color. So see from this bottom what happens. Ashok Leyland went up. So mostly out of these 5 days, we have mostly in greens. Okay, market came down. After that, again it went up. So it is mostly green. And then after see, it unwinded. Again market went up, it again unwinded. It went up. So green, blue, green, blue. So whenever market is taking unwinding, after that stock is moving up. So mostly if you see from this May to June, right, most data you will see green and only blue color. So it suggests that the Ashok Leyland went from 115 to 145 just by following long unwinding cycle, right? So you can, you can simply see that. Even if you see here, you can simply see that data right now is showing you that mostly it is long unwinding in this area. Okay, so any stock which is following a particular cycle, we can easily detect and what is the trend of a market. Okay, what is a trend in that particular stock? We're only going to trade the trending stocks. I hope to this point we are all okay. Okay, so let me just show you the application. Okay, for this, we can simply do the same analysis. Just give me a second. I'll share my screen. Okay. So before I move, so I just request all of you because we all are having the Fyers account, right? Okay. So if you simply go to the profile, so this is the front face of Quantsapp. So if you just go and type web.quantsapp, so you'll get this. Okay. Now from here, you can link your Fyers account, okay, with this Quantsapp. Okay. So here's that, just log in, click on add account and just log in. Okay. And this, so you'll get that, your account will be linked with Quantsapp and you can simply place the trade from here. One more thing, if you place your, if you subscribe this, you do this linking, right, you'll get the 1 month subscription for your, of Quantsapp, right? Okay. So there are tools which I'm going to show you. There are, very useful tools which will help you to identify these kind of things. So you can use it after the session, right? Okay. You have a good extended period of 1 month, use it properly, okay, and see how you can make money out of it, right? Okay. So from tomorrow you can use it. Okay. So first of all, we are going to target that. How do we identify that particular trend? Okay. So as we have seen that we got a lot of questions. I asked you questions, so you guys use only technical analysis, right? Now we have added one more flavor into that what actually people are doing. Use any tool, that's not an issue. Use any particular tool. Use Bollinger Band, use RSI, use moving averages, right? Doesn't matter. Okay, it doesn't matter. All the tools are working fine. But if you add a good flavor to it, what traders are doing, you will get the good picture about the market. And if I know if the stock is following long and long unwinding cycle, it is already bullish, right? Why should I go and check the chart after this? Simple. Either you mix it up all, or you just see the one thing that will give you clear picture, right? Okay. So how do we find it? So I'll go to the built up, okay, and I'll click on futures OIH. Okay. Future OIH means future open interest historical. Okay. Now if you see what happens here, even this is a Nifty chart. Okay. Simply you can see. So even if you see here, since this bottom has created, after that market went up. So there are a lot of yellow colors and green also. But if you see when market took a dip, these two dip on 12th July, 22nd July after that, from 26, so it was unwinding and then see market going up since then. So it started a long unwinding cycle. Okay. Now if you go and check Bank Nifty. Okay. See this if you see from this, since the starting of July, mostly you will see green and blue color. So whenever market moving up, it is mostly green. And when market is coming down, it is unwinding and then against the market picking up. So Bank Nifty is bullish since July, 33,000, since whole month, right? Okay. Now the question arises, how will we find this thing? ये हम ढूंढेंगे कैसे? How we will definitely going to identify which stock is following long unwinding cycle or short and short covering cycle. Okay. So in this case, we are going to go and check the cycle. Okay. Try to learn the concept, right? Okay. This will definitely help you to go for intraday and positional both the trades, right? Okay. Now once you open this cycle page, what will happen? Just push some numbers, like for look back period, push 20. Okay. And then you can simply go and select long unwinding cycle. Okay. And in count, you put 40. Why I'm putting this? What I'm trying to do here is that I'm trying to go and look back period of 20 days. I'm just to go and see what is happening in last 20 days. Is there any stock which is following long unwinding cycle? Okay. I'll see to the queries. Okay. Please just, keep the queries in that. Okay. I'll take the queries, all the queries, right? Okay. So that means, see, if you see here what is happening, the 20 days I have taken and I've selected long unwinding cycle and I just put 14. So it says that out of last 20 days, if any stock which is following long unwinding for at least 14 days, that means it has blue and green color mostly. Try to, help us and find that stock. So if I just see, this is all the F&O shares, right? If I click on apply, it will automatically get sorted. Okay. There are few stocks will get it only. Okay. Now see, automatically Bank Nifty is still there. So in the last whole month, we have just only one red. That means only one short came in between. And after that, it is clear uptrend. So it is 3 days long, then unwinding, long, unwinding, and then market. Okay. Even if you see here, you can simply see even ITC is there, right? ITC is showing you the long unwinding and it is moving up simply. Okay. So even you can see PVR is there, PI Industries is there, SBI Life is there. Okay. So you can simply go and find a stock which is trending. So my focus should be only on these stocks as of now. Why? Even if I want to trade intraday, I'll be more focusing towards, okay, more focusing towards the, the bullish trend. Bank Nifty was going down when Bank Nifty was going down. See, Bank Nifty haven't gone down in the last whole month, right? Okay, it's just moving up continuously. You can see that. So even that market went down, it was just a profit booking happening in this case. As I told you, profit booking is just a temporary phase. If this profit booking came in between, market is likely to follow the previous trend. So previous trend was bullish, right? Okay, here what happens on 22nd July, market took a dip for 2 days. And 27th, it gave me another signal that market is likely to move up. And see, 27, 28, 29, 3 days market is up, right? So you can simply identify that trend. And you can see AB Capital, it is from 15th July, it is continuously long and then unwinding. Then market is moving up, then again unwinding, again the stock went up by 2%. Clear-cut uptrend. Even I don't have to see what is happening in the chart. I know this stock is bullish, right? Okay. So you can simply go and do this. Okay. And if I just go and short covering cycle, same parameters, I can just go and see. So see what is happening. If you see now, most of the time you see only yellow and red. But now see, in the previous few days, we have seen that most of the stocks is moving up actually, right? Okay. So we haven't seen most of the shorts. It's short covering move happening. And some stocks started showing long also. Now, if the trend of the Bajaj Finance is weak, so probably we get a good long today. So it could be a reversal trade happening in this. SDFC Bank, it was totally in a weak trend. Now it moved up today, right? So it might be ending its trend now. Okay. So even you can see that the new cycle can be building up in these stocks. Titan, you can see, TCS, you can see that's all. It was TCSC, it was continuously in a short covering. But now it started moving up now today. Reliance has also went up by 2% today. So probably this might be end of a trend happening in this. Okay. So I can simply go and find any particular stock and you can look for those stocks. Indigo is okay. Page Industries, PI Industries, PVR, these all stocks are bullish, right? Okay. Now I need to go and check and trade in this in these stocks only if I'm taking a bullish trend. So I'm not going with the blind mind that what is happening in the market. Whenever I open, I'll go and check this screen, what is happening in this, what is the overall structure. If the market is moving up and the stocks which I'm going to trade today, it is bullish, so I'll just go and check the OI cycle and I'll get to know, okay, these stocks are bullish. Okay. Now then I'll take a trade. Fine. This is one thing. Okay. This is one particular thing that we can easily identify a trend. Okay. Fine. And probably you might ask, sir, why are you asking us to do a lot of research in this case, right? Okay. Probably that could be a case, right? We are doing a technical analysis, a lot of research, but derivative data sometimes confuse a lot of people. Okay. We don't want to put that effort in this. So I'll give you a very simple thing. Okay. Which can make you good amount of money, but at least you can use this tool as to determine a trend of a particular stock or a market. Once you get this, you will understand that whole thing. Okay. Probably the agenda is that we need to move towards the intraday trade. So I'm just giving you as of now some gyan for that you understand what is a trend of a market. Okay. Once you understand it, the trade is just a left hand walk. Okay. You can easily do it. Okay. So now the agenda is that where we can find again, what is the other way to identify any trade? Okay, so let me just so I'll go to a trap indicator. Okay, so let me give you one example of how this whole this thing works. Okay, so first of all, if I just go and check option chain. Okay, so probably as an option trader, you guys might be seeing the option chain, right? Okay, fine. Okay. So this is the current expiry. Okay. So let me just open. Okay. I'm just opening a stock. Okay. Okay. Now, just wanted to, get something out of you is that if you see, this is the open interest. Okay. So you can use this option chain. Option chain is live in our application. Okay. And this is free tool also. If you don't have a subscription, you can come to this and you can see this. This is live. Okay. Every data is updating tick by tick. Okay. But open interest has a different way, so it will update it accordingly, right? Okay. Now, if you see what is happening in this particular strike price, okay, if I just go and check this on 200 strike price, the open interest is light right now is 17 lakhs 80,000. But if you see what is happening is 11 lakh has been unwinded. What does that mean? There's a negative number is in the bracket 11,67,600. What is the meaning of that? What could be the meaning of that thing in this case? Any idea? You can type in the chat if you want. What is actually happening in this 11 this 11 lakh? So, and why there is addition happening in this, why it is unbinding happening in this? Okay, the reason being is that when market was trading below 200 rupees, okay, so these were the option sellers who wanted the market to stay below 200, right? So they wanted market to stay below 200. Okay, now what happened after that? When market started moving above 200, these all option sellers got trapped in this. So we call it a trap concept. Okay. Who will get trapped? Only option seller will get trapped. Okay. See what happens. There were some smart option sellers who sold to 202.5. There are some others who sold 205. Right? They thought that market will not break 205, but the stock again moved up. So this whole unwinding, when this whole unwinding is happening, what does that suggest? That when people are shifting the position, so these all people have shifted the position to 210 mostly, and probably on a higher strike prices. So when this kind of shifting happens, we say that the stock is trending. So this was a resistance for the stock. Coal India for the stock was resistance. 200 is a resistance, right? Okay. Once market broke it up, the stock moved to 210, right? So this is the resistance for the stock. It was okay. Now it has been taken out. So it is now the resistance is 210. Now what will happen if the stock tomorrow breaks 210 again? The option seller will shift to 215, 220 because they will feel that market is again moving up. So when this kind of shifting happens in the OI, what happens is that most of the time we say it is a trending stock, right? So you guys see the option chain, but I'm just giving you the same thing in a different concept, right? Okay, this is how it works. Now go to the trap indicator. Okay, trap indicator will help you to identify this trap kind of thing, and it will identify a trade for you. Okay, fine. So let's say it is giving me, so today it gave me Nifty is bullish. So Nifty signal came today. Okay, it's bullish, right? Okay, so it's saying that Nifty. So in Nifty, there are option sellers got trapped in this around 17,200. Okay. Now, if I say so what happens in this now? If I just so this says the call writing trap. That means it's a bullish market. In PNB, it is put writing trap. It is a bearish market. Okay. Now the question is, if I just wanted to, so I know that Nifty is likely to move to 17,500. Let's say, for example, okay, which strategy that you're going to plot in this? Okay, which strategy will so it is a bullish stock. Okay, so which strategy you are going to put this in this? Okay, so I'll just ask my team to put the poll again, so they will give you the answer. Okay, so you can put it after that. So I'll give you a few examples. So Nifty is bullish, let's say 17,500. Okay, so you can just answer in this. If Nifty's expected target is 17,500, give me what strategy will you deploy? Okay. Okay, simple long call. Okay. Okay. Good numbers. None of the above. I'm getting some answers. I got 1% for butterfly also. Right. quickly. If you just quickly do it, we'll just get the answers. Okay. That is a problem. Okay. Let me just see if the numbers increases to something. So we got almost 70% answers. Please try to answer everyone so that I'll get a good picture of you. What the thinking we have. Okay, so we are done. Okay, so 60% of the people will go and simply go and buy a long call. Okay, so I got a most on the long call. Second is bull call spread 33%, ratio call 3%, butterfly 1%. None of the above is 3%. So there are people who have different strategies, right? Okay, so they might be using it. Okay, so let's say if the answer is long call, okay, tell me which strike price you will buy. Okay, so the question is which strike price we will buy. Okay, so again we'll get the poll. Okay, okay, just a second, you'll get the poll. Okay. So I'll just add it. Just give me a second. Okay. So long call. So I'll give you some answers. Some the strike prices. So right now market is 17,200. So which strike will buy? The question is, that is a problem that people face, right? Okay. I know that market is bullish, right? But 70% of the people said, 60% of the people said we'll go and buy long call simply. So I'll give you some questions. Okay. So now tell me which strike price will definitely go and buy in this case. Okay. 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 So you'll get this just in a second. Okay. I'm amazed to see that we got a 60% answer on the long call, right? Okay. But there are good numbers who said bull call spread. That is okay. Okay. We have a different choices because I haven't mentioned the time. Okay. So probably this might have the answer, different answers when we're talking in terms of, time also, right? Okay. But it's not that. That is the problem that we have. 60% people said we'll just simply go and buy the call option. And that's why we are losing it. Okay. Now you got the three answers. Okay. Which strike price will buy? Just answer it. Okay. 17,000 call option will buy. Okay. Nice numbers again. So why we are playing on 70%? So there's a whole crowd that, answering the same thing, I think, right? Okay. Good numbers. Okay. Now that is the problem that we have, right? Okay. So we got almost like 70% answers. Okay. Let me see if I get some more. Okay. So 68% people will go and simply buy 1700 call option. Okay. 17,500, 25% will buy, 8% still going to buy 16,800. Okay. But can you just, say that this is the best strategy that you have got for this view? Probably not, right? Okay. Because see, even if I'm saying that probably in this case, the 17,200 would have been giving me the best profit, right? If market reaches to 17,500 or probably 16,500, we don't know. Or some bull call spread strategy would have given the best profit, right? We don't know the mathematics. We haven't done it. We're just playing that we know this thing. But we actually don't know what is the best answer, right? I really don't know, right? So nobody will get to know what is the right answer for this, because there are a lot of combinations that will come and we cannot calculate that combination as a human being. So that we have a problem. Everyone has this problem. Every option trader will face this problem in their life. Which strategy to deploy? We know, we can get our view. The question arises that which strike price will you buy? And this is where we all go wrong. You bought 17,500 call option, market will reach 17,500 on last day of the expiry and you will lose everything. Right? Even if you buy 17,000, market will not move anywhere. Then again, you are stuck. Even if you buy 16,800, market fell, you will lose huge amount of money because you are buying in the money call option. So there are any instance that can happen, right? And that is the problem that we all are facing right now. And tell me if I'm wrong that is not happening in your life, right? And you all know this happens, right? Okay. So that option mathematics we never do, and we cannot do actually, right? So let me just give you one more understanding of this, and then we'll move to the intraday option segment. So we'll use the optimizer in this case, and that will help you to identify which is the best strategy for this. Okay. So let me just put this value here. Okay. So see, I'll just put Nifty here. Okay. My target is, let's say, okay, so 70,500. So it is bullish. You can put it as a bearish also, right? Either ways or oscillate, whatever you have. My target is 17,500. And let's say my stop loss is 17,000. Let's say 150. Okay. I'm just putting this. Now I want my target to come in, let's say just 12. Okay. So this date. So this is my way. I'll click on get strategy. Okay. Which strategy can give me the best profit is here. The answer is here. Okay. So now if we see, the long call can give me 11,000 profit, but it will, probably I'll lose this much amount. Okay. Fine. Bull call spread, bull put spread is there. It is giving me, even if my stop loss got it, I'll still make money. Right. So this might be a good strategy. Short put is having an undefined loss. So we are not putting in this. Okay. Ratio call spread might give you loss if market moves up. So even if I, let's say I know bull call spread, okay, we call long call. So which long call should I buy? It says 16,500 call option buy. That will give you that profit. You guys said 16,800 will give me. This strategy, this strike price will give me the maximum profit if my market reaches to 17,500. So it has done all the mathematics for that, right? And if I just wanted to create bull call spread, this is the strategy that you need to create. 16,500 will buy 780 call option when I sell 17,200. So this strategy will give me the best profit in this case, right? So that is how this problem will get solved easily, right? Okay. So every option trader has a problem of selecting the strategy, right? Okay, fine. So this is how you can use it. Okay, now let's coming back to, so you can use the optimizer, okay, for that thing. Now the question is, we wanted to discuss the intraday moves, right? Okay, intraday trades. Now the question is this. So let's come back. So we have two tools which can easily help you to identify what is the trend of a market. So you can use long and long unwinding cycle. Then you can simply go and check the trap indicator, suggest that it's a bullish or bearish. You can simply go and take a trade in those stocks. Okay. Now talking about the intraday, how do we identify which stock is going to give a breakout today? Okay. So as I opened the Coal India, let me just show you again what was happening in this. So we'll check the OI of that particular stock. Okay. So if you see Coal India, it is, if you see from bottom, mostly you will see long unwinding, long unwinding, long. And yesterday, if you see, there was unwinding. There was a huge unwinding because of the expiry also. That was unwinding happened, right? Okay. That means stock took a small dip. There was a small dip happened in this. Okay. Now, in this case, the stock was closed around 202. Now, the stock was closed around 202. Okay. Now, see. Now, let's open the chart. So I told you I will open the chart in the last. Okay, totally. So we know that Coal India is bullish. Okay. Now, see, coming back to this daily chart. Okay. So it took a dip, right? Okay. It came back to 197. It was a low. Okay. Now, today it opened around 200 rupees. The stock opened around exactly 200 rupees, right? Okay. Now, so it was a breakout level or it will break out? No, I don't know. So what happens? Let's see the open interest for this. Now we'll check what is happening with the OI level of options, right? So earlier what happens? See, market was opened at 200. So this was the highest call option in the morning. This option has the highest call option earlier at 200 in the morning. Okay. So what happens? As moving up, almost 50% of the people have unwinded their position from this strike price, and they might have shifted to 205. Okay, and then what happens once this would have been taken out? So what happens? They have shifted to these strike prices. So see, the stock is exactly trading at 210. I know the stock trend is still bullish for Coal India, and if tomorrow the stock started moving up again and this started unwinding, these people are started exiting the position, I'll simply go and buy the again options, and that too intraday. And see, the stock moved up by 10 rupees today when this kind of short covering happened in the market. Okay. See, so let me just move to this. Okay, we'll go to this. Okay. So built up cycle we have already seen. So I'll come to this example. See, this was a Coal India. This is the breakout. Okay. And see what happens in future in late part. Okay. Here. It was, so it's a 1 minute chart. Okay. So the stock was consolidating since 10 till 230. So this was a huge consolidation happening. Okay. Now what happened in this case? This stock gave a breakout here. It gave a breakout around 204. Let's see the move after this. But how do I get a good conviction that this is going to give a breakout? So first of all, I'll go to the application and tell you how to find this thing. Okay. So once you have few stock in your picture that, okay, this is bullish, this is bearish. Okay. You know some stocks and you highlighted those stocks and these stocks are in your watch list. Okay. Now go to the triggers. Okay. Now what this trigger will do? Okay. Okay. So what this trigger will do? Just you can see this. See, this is a stock. This is the so this is, it has all the F&O stocks. Now see what is happening with the, even that, let's say I told you, you know, how to find those stocks. So this is the breakout trades, right? Okay. So as we have seen Coal India, how will you identify that Coal India is going to give a breakout? Because you cannot go and scan all these stocks, right? That is again a one issue that we are going to have, okay, in scanning those stocks, right? So this trigger will help you to identify that this is the need that we have, right? We'll likely to scan all those stocks which are trading near to the highest call option, right? So इसमें अगर हम देखें, तो you can, I'll just sort it out, okay? So it will automatically help you see this, what is happening in this. Okay, see. So this was Aarti Industries was trading at 783, okay? 800 is the highest call option where we have the green bar, the highest open interest. Okay. And then we have a highest put option. Okay. That means on the lower side. So it says that for 783, this is the resistance and this is the support we have. Okay. Now, if I check here, what is happening? The difference between these two prices is 2%. Matlab the current price and the highest call option, where the resistance we have is the 2%. Okay. And support and the current price is 10%. That means if the stock fall and will reach to support, it is a 10% it has to move. So I don't have, I will definitely not go and check Aarti Industries at this point of time. So I'll click on call difference and sort this out. Okay. I'll simply sort this out and try to find stock which is trading near the highest we know the stock trend is bullish. The coal India is automatically bullish, right? Okay. Just give me a second. Sorry. Okay. So coal India is bullish, right? Okay. Okay. Coal India is simply bullish. Okay. In this case. So tomorrow, if the stock breaks the highest call option again, okay. If the stock breaks the highest call option, again, it will give you move. Right. That is what it has to happen. So now right now we have a huge addition happen. But see, in the Oberoi reality, if you see, the stock haven't reached the highest call option, still some difference, but 52% of the OI has been unwinded. This is where you got a trade, right? Okay. IXC, this is unwinding has just started, the change in open interest. So what is the condition to fund the stock? The stock should be trading near the highest call option, which will give you breakout. And then the OI should be negative. Fine. So we have created a whole setup. What is that? The first is this, that the one thing is that we need to identify the trend of a stock. Okay, so trend of the stock, we know coal India is bullish. Okay, tomorrow what I know is that the stock will break 210 and this will start unwinding. There's a negative number coming up in this. Okay, so that means we'll get a breakout in above 210 also. Right. But still, is there anything? So this is the whole setup. Okay, once it will start breaking and there is unwinding happening, we know this call is likely to move up. Now the question arises is that, is there any way that we can still get a good understanding that how this move is likely to sustain? Because we are trading intraday. Okay, so whenever we're trading intraday, how do we are going to decide that this move is likely to sustain? Ye move sustain karega, how will we decide? How will we simply go and decide it? Okay, so I'll show you one more specific data, okay, which is very unique. Okay, so I'll just open 200 call option. Okay, 205. Okay, now see what happens. So in this chart, how do I get a conviction at this point of time that this breakout is likely to sustain? Because there are a lot of fake breakouts happening, right? Okay, now I'll ask you one more question here. That whenever we take a trade in any particular option or a future, or when we're talking about a breakout, right? How you confirm that breakout? Generally, people say the volume. Okay, so volume is a very outdated data. Everyone checks it. Okay, everyone has that understanding that okay, this is a good volume. Okay, and again, even if after giving the good volume, the stock falls, right? Okay, so people know how to manipulate the volumes. Okay, so that's not going to help you in this case. Okay, to have a good edge over the other people, you need to have something good. Okay, something new data. Okay, now just remember this thing, or try to get something in your mind that that whenever someone buys at a market price or he's buying at a limit order, is there any difference in this? Is there any difference in someone buying at a limit price, putting the order at a limit price, or he's buying at a market price? Now see what happens. I'll show you. We'll put the OI in this. Okay. See what happens at this point of time when this market gives a breakout here. This open interest drops suddenly. This is from 3.32. It drops to almost like 2.17 or probably 1.5. So it's almost 50% gone. Why this happens? So when this breakout came, actually, what happens? These all option sellers of 205 call option. This is 205 call option. Okay. What happened with these players? What happens? They started feeling scared that okay, market is showing a momentum and we are going into loss. So we should exit from this call option as a seller. They have a good conviction. They went wrong. What they will do? They will go and exit the market at market price. Is it or wrong? Is it right or wrong? They will simply go and exit at the market price. Right? They will simply go and exit at the market price, right? Okay. And now you are a buyer. Let's say you see this call option, right? Okay. So this was a trading at 7.8. It moved to 8.25 suddenly. So you will have a FOMO in your mind that, okay, this is going to miss out, right? So let's go and buy at a market price. You will put a market price again here, right? That is happening. That is going to happen. So there are two people who are trading this breakout and both are placing the trade on the market price. And who are these people? These people are actually the option sellers who are exiting the market and the option buyers who's entering in the market. In the starting of the session, I told you option buyer will only make money when option seller will start losing. This is where the option sellers are losing. You can see that their conviction is just zero at this point of time. they are not pretty sure that this market is likely to fall again from it. So that's why they started exiting. If they are exiting, who is going to control the market? You as an option buyer. Okay. So there are two people entering in this market at this point of time. That is and here we are going to get a bullish market. So how do we get this? Do we have any kind of this data which gives us a upper edge to identify that, okay, this breakout is likely to confirm? Or is there any data which helps us to understand that, okay, there are people who are buying this option at a market price? See, this is an illiquid option. This is the stock options are not so liquid. So people are not creating a lot of market orders at in these kind of call options, right? Okay. So what happens? So we have created one very important data. You can simply go and type buyer initiated quantity, okay, in this and see what happens. So I'll just put a line here. See what happens. This was a breakout level. Okay, I'll just put it here. Okay, so you'll have this. See, let me make it black. Okay, so see what happens on this candle. See, when this trading was happening in this call option, no people were buying at a market price, not at all. Okay, very few orders that coming up. Now what happened in this? Once market come to this, see, in just 1 minute you got, see here the quantity. See, then just 1 minute you get 80,000 quantity at a market price. Why someone has bought so much quantity at a market price? Because they might be started feeling that they are getting scared, so they are exiting at the market. Option seller buying at a ask price. This is what the quantity. Or option buyer buying at a market price. So it moved to this price. Again on the next candle, see 67,000. Again on the next candle, 62,000. Again 75,000. In just 4 minutes, almost like 2 lakh quantity has been bought on the market price. More than 2 lakh quantity. So it's not a retail traders are doing it. Someone probably big prop traders is doing it, right? So if they have a good conviction on yes, okay, just give me a second. We'll end up, right? Okay, so this is where you get up the whole thing. Okay, so once you have this whole understanding of this, that there are a lot of people who are buying at this market price. So this price is not going to fall from here because they have bought huge quantity. And see, the 8 rupees call option just moved to like almost like 11 rupees in just like 10-15 minutes, right? So this is what intraday moves that you need to capture, right? Okay, this is what the moves you'll get it. Fine. Now this is actually a Pro Plus account that you have. So as I told you, you can go and simply map your account, Fyers account with the Quantsapp. Once you will do it, you can simply place the trade from the Quantsapp and you'll get the 1 month subscription free from the Quantsapp. Okay, so you have a ample of month to test it, try it, and see how you can simply make money out of it. And this is what gives you edge over the other people, right? As an option trader, we don't need to see the charts because we know how to identify a trend. We know where the breakout will come, as we can simply go and check the triggers and all those things. Now we have one good data, which is like which will definitely give you upper hand, which is giving you good understanding that this breakout is likely to sustain. That is buyer initiated quantity and seller initiated quantity, right? So this might give you a good. So we call it a order book data. Okay, so we have created this data for NSE also. So NSE also sells this data. So you can see simply you can at this point of time you can get these kind of trades. Okay, now let me just cover what we have learned till now and what are the things that we need to look for. Okay, first of all, as an option trader, we're just not going to start randomly from anywhere. Okay, we need to understand that what is the trend of a market or any particular stock. So we'll go and check what is the cycle in any particular stock. So that's what we need to start. We always go systematically. A lot of people start randomly and just go and open the chart. Okay, this looks bullish, go and buy it. No, we are not going to do that. We are simply going to understand that, okay, this is a trend. This is the trend likely to be. So find a cycle. If the stock is bullish, we know that this is likely to happen in coming up. Okay, so that stock might be in your list. Okay, we got few, let's say 3-4 stocks in your list. Okay, now the second thing is that we need to see that, okay, is that the stock is is in cycle or it is correcting or it is bullish. So we know that. Okay, once we'll go and check this, we'll see where, if this stock is giving me a breakout. So how we identify the option breakout? If the stock is trading near the highest call option. So we know that Coal India was trading in a long unwinding cycle. Yesterday it took a dip. Now today started moving up. As soon as it started moving above 200, we know that this call is likely to give a move. Okay, so see, even if in the morning it was trading at 6 rupees, the call option, and then suddenly it moved up, right? So here, once that stock will break the highest call option, where we have the highest call option, it might give a breakout, and that breakout is likely to sustain, right? Why this breakout is likely to sustain? Because we get the confirmation from something called buyer initiated quantity, seller initiated quantity. What is this? This is the order book data. You will get the real time data. It's on 1 second also, but at least we need 1 minute to scalp this trade at least. Okay. So by the time you place your trade, you get a confirmation. I get to know that you have placed the trade. So this is so fast. Okay. By the time you receive a confirmation in, let's say, 0.25 milliseconds, I'll get this data for 0.1 millisecond, right? Even very quickly, than that. Okay. So you have this whole picture in your mind. Okay. So you have to be very quick in this because we are taking the intraday trades. Okay. So the agenda is that first identify, some stock which is trending. Okay. Because we are buying this. Okay. So we'll be talking, but more from the perspective of buying. Okay. So find a trending stocks. Okay. When they will give a breakout. So like Coal India gave a breakout, we'll just find it. Okay. So we have some more stocks. Like if you just go and check. So see yesterday what happened, IndusInd Bank. So see, it gave me move above 1,000 rupees. Okay. 1,000 call got unwinded. Okay. And suddenly what happened? See this, the stock moved up, and see the move after that. This move came up, and see if you see in the options, the 7 rupees call option moved to like 11, 12 rupees in just like 5 or 10 minutes in the morning session only. So this, see the quantity that they have bought it. So this is again a buyer initiated quantity. See how much quantity traded at a market price that point of time. If these much people are buying at a breakout, just at that breakout, here also, even at that 7 rupees call option turning into 12 is a good percentage move. You will have a good conviction always, right? Okay. And that's one trade. Okay. So you can simply identify these kind of trades, right? Okay. See, one trade we got few days back again, that is PVR. Okay. PVR was trading around, see, this was the trigger trade, and it was, see, unwinding started, and this is 2,000, the highest call option. And suddenly see after that what happens? This 5 rupees call option went up to 20. That's 200, this 2,000 call option. Around 10. See, and this buyer initiated quantity was done. And see, there was no one buying at a market price at that point of time. Suddenly this bar and this bar just confirm me that this is likely to move up. And see that call option just doubled in next 5 or 20, 30 minutes, in 1 hour, right? This is how you can simply find the trades. Okay. Fine. Okay. Okay. So this is what we need to do. Okay. So I've summarized the whole thing. So if you still missed out, I'll just give you the whole setup again, so you can use the tools. Okay. So for like, if you want to, so just give me a second. Okay. Yes, same concept will remain. Okay. So the concept will remain the same. I'll just talk about the Bank Nifty also. So first of all, go and, the future built up cycle. Okay. In built up cycle, you can simply identify what is the cycle. So what was the number? I'll put 20 here. Okay. And I'll just go in long and winding. Okay. And then I'll put 14 here. Okay. Click on apply. So you'll get some stock which are trading in bullish. Okay. You can simply see Bank of Baroda is still, the stock is bullish, right? It shows so today shows a short, but that is not a huge short. Okay. It's a very small short. Okay. That is okay. One short can come in between also. That's not an issue, right? Okay. So this gives me again another sign that these stocks are still bullish in the market. Bosch is still bullish, right? Okay. Humans is still bullish. Okay. Eicher Motors, the stock is still bullish. Okay. Since 19 July, the stock is continuously bullish. Okay. So if I just go and check Eicher Motors, now see what is happening in this. We'll check the daily chart. Okay. So see, it was, the stock is continuously moving up. It came down, and today it showed me again reversal. So it's a bullish again. So it can give me another breakout. Okay. So if I just check in Eicher Motor now, so we'll go and check the OI. So I'm convinced because Eicher Motor is bullish stock. Okay. So Eicher Motor is trading exactly at 3,100. See, unwinding is already been started. See, 3,100 call option is already been started. Okay. So there are a lot of people who already exited from the market. Now what happened if tomorrow the stock again started moving up above 3,100 call option, and that call option shows a good built up from the buyer initiated quantity that people are coming in buying at a market price. This will again give me good conviction that I need to go and buy the 3,100 call option for Eicher Motor. By the time people will understand what is happening in the Eicher Motor, what trade is there in this Eicher Motor, right? Okay. This is what we need to do. Okay. LTTS we can check, but LTTS is not that liquid stock. Try to avoid. Okay. So those stock which is bit illiquid on the options, right? Okay, this might give you trades. See, 3400 has already been unwinded. Okay, so try to be on the bit on the liquid side. Okay, so see 3400 unwinded, then that's why the stock went up. Now the stock is trading very near to 3600, or it take a dip, right? So once it will break 3600, we know that this is likely to give another breakout on the high side. But I don't know what is happening in the, because it's the LTTS is not in the long unwinding cycle. So first we need to identify the stock trend. If the stock is in long unwinding cycle, that stock might give you good conviction. Okay, they're like Cummins is there, right? Okay, so now if you see Cummins is trading 1224 right now. 1240 is the highest call option for this. So as soon as the stock will start breaking 1240, I'll get the good conviction trade in this. Okay, I'll take the example of bearish also, no issues. Okay, so because actually the market has turned totally bullish, so we'll not get a stock actually, right, for the short side. Okay, I'll talk about the Bank Nifty also. Just give me a second. Okay, so we'll go and check the. So I just request all of you to map your account with this. So at least you get a 1 month subscription and try these tools, okay, from tomorrow, okay? Even if you get any doubt, you can come to the support at Quantsapp team, or they will help you, right? Okay, just mail it to the whatever query you have, okay? They will help you. So try to utilize as much as this application will save your life, okay, from a lot of fake trades, okay? So see, if I see Indiabulls Housing Finance is a week, see, it is just weak stock. So I can, so it will go in a ban, I know, but we can check it, right? Not an issue. So say Indiabulls Housing Finance is a weak stock. So I'll just go and check what is happening in the put side, okay? So the stock is trading exactly at 110.80. So if this stock break 110 put option, see, that's a good addition happened yesterday. So today, in today's session, okay? So if that breaks, it can fall to 100 rupees again. So I know this 110 put. So tomorrow, if the stock started breaking 110, and the buyer initiated quantity again started increasing in 110 put option, I'll simply go and buy that put option. Okay, that is what example we can have it, right? Okay, fine. Okay, yes, you might get this. So first of all, this application is only for the F&O stocks. Okay, will not get the the equity shares data here. Okay, so this is only for F&O stock derivative options. Okay. Fine, you get the recording, you can get this on our, I think, on the YouTube channel. Okay, so same thing, that's not an issue. Okay, the next thing we are going to talk about this for Nifty. Okay, so just one thing I'll just like to bring into your notice that generally if you see the highest call and highest put option of Nifty and Bank Nifty are very far away. So it is very unlikely that you're going to get a trade in Nifty and Bank Nifty in this particular triggers option. Right? If you see right now, 16,500 is the highest put, 18,000 is the highest call option. Even if I come to the current expiry, you might get something different. Okay, so see, again, there's a difference. Okay, so huge difference, right? Okay, so that means the reason here is just you need to focus on this is that you will not get good trades on indices. Okay, so what you need to focus specifically if you are intraday trader on options on Nifty and Bank Nifty only. So you need to just able to see this particular chart very thoroughly. Okay, so I'll come to the current expiry 4th August. Okay, now see what happens. Okay, so 17,000 call option has unwinded a huge today. Okay, because the market opens with a gap up opening, right? Okay, so there is unwinding 16,900. See, the all unwinding. Now tomorrow the market is trading near to the 17,200 call option. So as soon as the market will start breaking 17,200 call option, we'll simply go and enter in that and buy that. Okay. See, I'll just add it here. So 17, so it was 04 AUG 22 17,200 C. See, and now if you see it, I'll just add buyer initiated also here. And you can plot the OI chart also in this. Okay, so you will get the real-time picture what is happening with the OI actually. See, even in the last session when market moving up, so they see you got a breakout here also. Okay, see, in this point of time, nobody was buying major call options. Okay, so that was again because Nifty is liquid, so people keep on buying good quantities at market price. But see, when we got this breakout, it was like 1 lakh, 40,000, 50,000. But when we got this breakout, see here, 3 lakh quantity someone has bought, in this 1.1.4, 3 lakhs again. So it is almost 4 lakhs in 2 minutes, and then almost 4 lakhs again. So 10 lakh quantity people have bought in this somewhere. So and see the open started declining. After this, 86 rupees call went up to 114. This is what the scalping that you need to find, right? So the market was breaking up at this point of time. It gave you break, right? For triggers, is there any way to list on? Not specifically. You need to specifically know and trade only the stock which are trading in Nifty 50. Okay, so it's 50 stock. Even if I won't recommend you go and trade on all the F&O 50 stocks. Even the 30-40 stocks, the first 30-40 stocks is okay because they are quite a liquid, right? Okay, and in Nifty you will get this moves. Okay, so these moves are every day you'll find these kind of moves. Okay, in Nifty, Bank Nifty. Okay, but you have to be very apt and we have to be very ready for every time when market moves up. Okay, see, even on that day when market just moved up, see here also you'll get the good sign. Okay, market opened with a gap down opening again. It's consolidated for some time. When it gave a breakout, see market moved up again. This 35 rupees went up to like what rate? Okay, fine. So this trade you will keep on getting, but you have to be continuously checking the chart of that recent strike prices. Okay, so it is 17,200. So check that 17,200. See, okay, if market is trading near 17,000, let's say 170, again you need to go and check 17,200 only. So just go for the nearest proximity call option and just go and take a trade on this. Okay. Okay, so okay, let me just okay. So no for the commodities, right? Okay, so it's only for equity shares as of now. Please send the account linking post. So you simply go to the web.quantsapp. Okay, once you register your register your number and all those things, go to the profile. You will get this Fyers here. Okay, so just click on this thing and you'll get the credential to put trade. Okay, you click on login, you will get that. If you just put it there, your name and client ID, you will get this. Okay, fine. Okay, fine. Just you can put it there. If you so these indicators are not in the Fyers specifically, but if you link your account, it will get it, right? Okay. Okay, so these PCR available, yes, put call ratio is there. Okay. Okay. Please explain how this will help in option selling strategies. Okay. Sorry, just go back. Okay, so how this will help in the option selling. So in the option selling, there is let me just give you a glimpse of it. Just a second, okay. I'll share. Don't worry. Just give me a second, okay. Okay, fine. That works. Okay. Okay. So option selling strategy for option selling. So we have one good tool. So you don't have to use these tools specifically. We have one good tool, and you can just use this option writer tool as a for option writers. Okay, so this is very good tool, very newly optimized. Okay, you go and explore this tool. We have some webinars also. We can just simply go and check how to use this particular tool, and this is very nice. Okay, so this will automatically optimize your option selling kind of the strategies, right? Okay, so this will automatically give you the optimized strike price which we need to sell. Okay, but today's session was mostly on the buying side, so that's why I've shared only from the buying perspective. So once we keep on doing a lot of webinars with Fyers. Okay, so once we'll come with the option writing tools, we'll definitely talk about the option writing also in that case. Okay, so that's the thing. Okay, so any further queries that you can you also add the sell initiative? Yes, you can add. So there are like almost 33 indicators, right? Okay. So for order book, right? Okay. Simply if you go and check the Q hyphen, so you can add the higher order weeks also. And there are a lot of other indicators which is based on how data is actually flowing in the order book. Cancel orders, buy order, average cancel quantity, new order quantity, buyer initiate, seller initiate, right? Trading VWAP. So you get all those indicators. Okay, so you need to specifically use which kind of information that you need from that order book. Okay, and that's why the name is also very simple to understand. Cancel average buy order quantity. So what are the average quantity that has been cancelled at that particular minute? You know this thing, right? So that is what we have. Okay. Fine. Okay. Okay, so that's the thing. Okay, so I'll just